Hi everyone, welcome to LAR. How are you guys? Can you hear me? Can you see me? Hope everyone's there today. Hope someone's there today. How are you guys? Anyway, here we are again trying to cover a bit of a daily task. Hope he's doing better. The fact is that I have no news to share with you guys about him. I'm really sorry for that. But the fact is that we are holding back on calling him ahead of he feeling better. Hopefully, we will see him back soon. Okay, let's keep on waiting and praying for him. Okay. Anyway, here we are with the market. Pretty wild these days. We have seen yesterday the day ending with stocks reversing all of our Wednesday gains. It's like the Fed never happened, guys. It's like we have seen we were all impressed with the Dow Jones rising over 280 pips on Wednesday, only to fall back 330 on Thursday, right? And here we are, early US opening with stocks at having already posted lower lows ahead of the opening, and the pressure growing, right? We are around the opening, as you can see. Not much going on right now in here, but the risk remains to the downside. I do believe that what the Fed said on Wednesday about the global slowdown has triggered some sort of risk aversion, and the fact that the stocks had been on a bullish rally for so long is of course waiting on market sentiment. The slowdown, the economic slowdown the Fed is forecasting, the situation going on in Europe with data not helping, and in fact we have in a scenario also where it's clear dollar bulls remain in control, right? uh, Regardless what we can take out of the Fed from last minute saying that the US central bank may delay its rate hike. The fact is that there is no other economy pointing for a sooner rate hike, right? There is none. The only one that may be in the path of or considering a rising rate is the UK. The rest is not. So we are there. We are on a path where the market is being led by rates, and the first economy so far in the mind of the traders to raise them is the United States. Anyway, and from a technical perspective, we have discussed this yesterday, and I do believe it's critical, right? Because in the 4-hour charts, we have seen the euro stalling right around the 23.6% retracement of its latest bearish run measure from 137 to 125, and here we are. The pair retraced strongly from that level, and it's trading around 26.30 price zone, unable to pick up an increasing bearish momentum in the 4-hour charts. My personal take is that we need some follow through below this 26 price zone to see the pair returning towards 25.50 first in the short term, right? And towards these lows at 25.01 later. Now I do believe that the risk to the downside has resumed. I don't see more gains, and I won't dare to buy this particular pair unless we clearly break above this level, open a candle, made a pullback, and a lot of technical confirmations far from what's going on right now. And with pound, what I was seeing is that the pair also started near Fibonacci retracement, but more important is that it also break below the 23.6%, right? The 23.6, sorry, of the latest bearish run. So here we are again pressuring this last day's lows, and with the risk towards a break lower also increased, particularly because we are too close to the 160 figure, right? It's a critical level in the mind of traders, and I do believe that if we lose it, then we are going to see lows below this 59.30 we saw earlier this month. Okay, So the risk in here is to the downside. And I do believe that the lead, of course, will be again stocks, okay? We are early seeing a recovery in here. I keep an eye on there. I will give stocks, I don't know, maybe 1 or 2 hours to settle and set the intraday tone. We have started to the upside most of the last days, so let's see what happens in here. Keep in mind also, as we discussed earlier this week, we have earning reports all through these days and next week also, and that can make them flip like a coin intraday. Okay, beware of that. Again, for pound, 160.90. Okay, this resistance level is the Fibonacci level, sorry, is the resistance to take care of, right? And as long as below that area I'm short in the pound, I will prefer selling rather than buying, and particularly on a downward acceleration below the lows. For the dollar Japanese yen, I was saying that the initial bearish momentum we saw after testing this area late Friday, early Friday, sorry, has held around this area, right? And over these past 2 days, we are seeing the pair in a tight range, 107.50, 108.20 the most, and a consolidative stage going on in there. So technical readings, at least in the short term, are losing a directional close, right? Because we are in range, in a tight 70 pips range. But what I'm also watching in the 1 hour charts, I will put it a bit smaller, right? Is that this brown 100 simple moving average has crossed below the 201, right? And that's a sign that the bears are more in control in this particular pair, besides the distance between both moving averages widening. And if you take a look at the chart well before, you will see that it was sorry, okay, there we are, okay, there it was September 2, when the 101 was, it tried to break below this 200 and fail and remain above, and both head higher, right? Both signaling the upward tone. Now we are heading lower, and therefore this area should be the immediate resistance level, 108.20, 30 price zone. Okay, I watch for the most in the 1 hour chart. This particular indicator is not in the not in the 4 hour one. Okay. Anyway, we have seen spikes up to 108.15, so I would like to see at least a 1 hour candle opening above this 100 simple moving average. Okay, to start thinking about an upward move in this particular one. Of course, if we lost the 107.50, 60 price zone, risk will come to downside towards an approach to 102. From the fundamental side, we have some pending data ahead, but the main event of the day has been Canadian employment figures, much better than expected. Something that should not surprise market, because usually Canadian and American data tend to came along. I remember the old days when I started trading. We had Canadian employment figures being released maybe 1 hour before American ones, always in the same first Friday of the month, right? So it was a nice indicator of how American readings may come afterwards. Those days are over. Now they both release the readings mostly at the same time. If not, what we're seeing now that the US has released his numbers a week before Canadian one. But anyway, it was not a big shock to see them increasing. And what I noticed is that Canadian dollar, the US CAD, right? The Canadian dollar has a spike higher against the greenback. The pair tests 1160 or so, okay, and then it's bouncing, right? There's no downward momentum favoring CAD in here, so that's another sign that we may regain 112 and the week above it, and therefore continue raising. The fact that oil has been in a tier lately, it's also waiting on Canadian dollar. It's pushing CAD lower because oil is all different story, you know, guys, because we have seen oil in a steady decline ever since hitting 107. We have been as low as 83 today. We are seeing some upward short-term potential, but the fact is that the world, it's it's decreasing its demand, right? While supply continues to rise, and it's the law, right? If we have a lot of supply and little demand, the price will go lower. And the current global economic scenario keeps favoring that situation. So any rise as the one we are seeing today, if you like to trade oil, it will be rather be a selling opportunity that will a signal of a commodity bottoming or or ready to resume its recovery. We have one speech later today from one of the Fed officers, but the fact is that these days we have been hearing jawboning from almost any possible Fed officer, and and that had ended up producing little effects on the forex market, on the forex board, right? We have seen not much action coming out from there. So actually, I don't expect it to be a big shock, right? Nothing that will rock our words today. I would rather believe that stocks again will be the leading indicator, sort of, right? And furthermore, there's not much data in the calendar, so that's it. Keep an eye on stocks, guys. Okay. One thing that I would love to remark is that on Saturday over the weekend we have some Draghi speech, right? The IMF is meeting in Washington these days, and he will be doing a closing statement over banking. Particular, he will be addressing over the banking situation. So he has been using every possibility he had to speak lately to down talk the euro, right, guys? I do believe that he may take a chance to remark that. And furthermore, we have Chinese readings over the weekend. We have new loans, trade balance, money supply, early Sunday before the market opening, I do expect. So we may see some interesting gaps, guys, next Sunday, Monday opening, depending on where you are. Beware of that. Beware of that because no matter where the market closed today, I smell that we may have opening gaps next week. Okay, if you can profit from positions or protect others before the day is over, that will be a good thing to do today, right? It's not usual we have that much first line readings or events on Saturday and Sunday, correct? As for Aussie, the pair, what I'm watching here is that we have break below former low around 87.30, and despite we are now trying to regain that level, 87.70 seems more like a top for me in the pair right now in the short term, and I would rather consider selling around this level than adding or attempting to buy and push it higher, right? 87.70 is tops for me for the pair. We may fall down, and that if we recover above these former lows steadily. If we fail at these levels, then I would expect the pair to resume its slide. Another interesting thing that's going on in the market, and I would like to watch, is gold. I will, okay, there we are in the weekly chart, right? We have a low around 1180 back from 2003, another in December last year, and another one last week. Okay, so we have sort of a tough floor in there, and so far market reaction after testing it earlier this week is to buy the metal. Okay, but yet we have not enough upward momentum. Former low highs, that 1235 area is still holding, and I would like to see some follow through above this area to start thinking about buying gold, you know, guys, because I rather be a bit late and after the movement is confirmed that get trapped too early in in a correction against the dominant trend and therefore lose the grip. Okay, if we break above that level, then I'm eyeing 1260 price zone. But if we retrace back below 1210, I do believe the risk will turn back to the downside. And of course, if we somehow break these lows, being that strong and that historically important, then we may see an 1100 pretty much as soon as next week. You're thinking on shorting Canadian dollar? Well, if it sucks, don't give a grip, don't give some favor to the dollar, then it could be a choice. But taking a look at the chart, I'm not feeling confident at current levels, you know? Yeah, indeed, we faltered at 12, but I don't know, maybe a break below post-news immediate low should confirm further downward potential in the pair. I'm not feeling comfortable, me personally. Of course, it's just my opinion. Shorting CAD at this moment. But well, it's a choice. No, I don't know. Market seems to be favoring the greenback despite whatever we are seeing elsewhere. You know, I don't know. Maybe I'm wrong, but it's just use tight stops today. I fear we are going to see much more than what we are seeing right now. Okay, yeah, indicate stocks are turning higher. You're welcome. Of course, it's just my view, right? Anyway, good you can see me in the room. I'm getting a lot of internet errors in my other computer, but seems we are doing okay in the room. See, Canadian employment data, that's what I'm saying. We had much better than employment data in Canada, and yet see how the rally or the gains are being fight back by the greenback, right? So that's that. What I usually do is watch the high and the low of the 1 hour candle of the big news release, right? So if we break 801, then I'm pretty sure the pair will probably set a trend. Yes, Canadian economy is very linked to the US, and as I was saying earlier, it's pretty normal that both reading came online. Remember, we had an outstandingly positive employment reading in the US earlier, last Friday, I mean. So that's not maybe one of the reason market is not too surprised. But yeah, indeed, Canada is being benefited by US numbers. Good morning, good afternoon, and welcome all. Anyway, I do believe that we are going to see a lot much more action next week than this one. You know, I was reviewing the calendar, and we have inflation all over Europe, China, UK, employment figures in the UK. We have a lot of data coming next week, and the market had a lot of action already these last 2 days. So maybe we be a bit more quiet today. Again, I do believe the major risk today will come from whatever stocks do in the US. All those lines you see in my indexes are mostly drawn by Dale, right? In talks with him, we have set a critical support in the DAX, for example, in this area, and we have been through that level earlier today. Now the index seems to be recovering some in light of US positive opening, but still we are 20 minutes away from the opening, so I would like to give US stocks an hour or two to see if they actually maintain the positive bias. Yeah, no one. I do believe in the yields slide are no good news for dollar Japanese yen like bulls. I'm not feeling bull here either. As I said earlier, the 1 hour charts and the behavior of the 100 and 200 simple moving average anticipates some further declines in here, albeit we have been for since yesterday in a 70 pips range. We are trapped in there, so we need some sort of confirmation before we get a directional move in here. Yields bounced a bit uh, after that, but still uh, are quite low, near the year low. I saw a small bounce, but not enough to trigger a recovery so far. Not something encouraging to support a strong dollar gain against the yen. Aussie is a bit bullish right now, short term. But as I was saying, I would like to see a test of 87.70 and see the market reaction in there. Okay, and see whether if we break above it or we begin retracing from there to decide what to do at these levels. I'm not feeling happy. I do believe that if we lost 86.80 on the other hand, we are going to see much more bleeding today. But still a quiet US opening so far. Not really huge, not really big. Yeah, Plosser, as I told you, Plosser is on the news. He was scheduled to speak today. He's saying that quantitative easing, yes, it's ending this month. Nothing new because we all knew that for already 3 or 4 months. So not a big trigger right now to look for, but I was thinking that we don't have any trigger either for yesterday's pullback, besides the fact that the Standard & Poor was unable to breach this resistance zone, right? And we like it or not, we are ending the week below this short-term trend line. So if it happens, risk will remain to the downside, and that should be of support for both dollar and yen, at least as if the move is driven by risk sentiment. Okay. Okay. Are you there, guys? Are you ready to do what? Do you have any other trade in mind at this time of the day? uh, 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 I'm watching the euro particularly. I like it on a break below 26.10. These lows, if we lose them, the pair should reach 25.70-80 area. That's my main target right now. Okay. Seems we are exhausted after what we saw in the market this this week, and this session is extremely quiet. Anyway, uh, I would like to add that what we have seen these days in the market, and if the greenback ends these days at these levels or lower against its European rivals, uh, the fact is that the trend will overlap any technical reading, any fundamental data for the upcoming weeks. As I said a few minutes before, uh, the US may have delayed a bit the date of the rate hike with latest minutes, but the fact is that it's still the first in the line, okay? There are no other major economies right now in risk of rising rates sooner than the US. Maybe next week, if inflation jumps in the UK and if employment waves also jump in the UK, then pound buyers may appear waiting for a sooner rate hike also in the UK. But I'm pretty convinced that the market is all about rates lately. With the US being the first in line, market will tend to use fundamental data, right? If positive for the greenback, to buy the greenback, and if negative, to wait on pullbacks, okay, to buy it. But seems the trend is here to stay. We have a minor correction, and it will continue, okay? That's my thought. That's my view at this point. There's not no big change in that. It was uh, a minor scare what we saw on Wednesday. A bit of a cleanup of the amazing amount of shorts in the euro or longs in the yen. Okay, guys. Seems there are no comments or no questions, or maybe I can't see them. I have refreshed several times. If that's a mistake, I apologize, but since that, I will leave you for today and see you back, okay, next Monday, and hopefully with a lot of news on what's going on with Dale's health, sorry, and more of a market views to share with you. You're all welcome to share with us, okay? Also, thank you and see you soon. Bye bye.